They say the rich don't think like us. But what if I told you that right now, behind closed doors in private investment meetings and inside the glass towers of global finance, the world's wealthiest people are quietly preparing for something? Not a recession, not a stock market correction, but a shift. A shift so big, so structural, so quietly underway, that by the time the headlines announce it, the people at the top will already be positioned, and everyone else will simply react. What do they know? What signals are they reading? And why are they suddenly moving into gold, crypto infrastructure, farmland, energy assets, and tokenized real estate, all at the same time? Today, we break the silence. And the most important part? Nothing they're doing is random. To understand what the rich are doing from 2025 to 2030, we first need to zoom out, way out. For the last 80 years, our financial system rested on three pillars. 1. The US dollar as the global anchor. 2. Central banks controlling interest rates. 3. Asset markets fueled by cheap debt. These pillars held the world economy together through wars, inflation waves, and technology revolutions. But every system, no matter how strong, eventually reaches a point where the numbers stop adding up. And here's the twist. The wealthy are acting like the current system is entering its late stage, and they're preparing for what comes after. They're not predicting collapse. They're predicting transformation. But to understand the moves they're making today, we need to go back to the origins, to the moment the fuse was lit. The story begins in 1971, when the world left the gold standard. Overnight, money became elastic, bendable, creatable. Governments could print. Banks could lend freely. Debt became the engine powering everything. And from the 1980s onward, the wealthy learned how to use this engine better than anyone. Borrow cheap. Buy assets. Watch those assets inflate. Pay back loans with weaker dollars. It wasn't magic. It was mathematics. But the engine that built fortunes also created imbalances. Imbalances that couldn't last forever. From 2008 to 2020, interest rates fell to historic lows. Money became so cheap that everything inflated. Stocks, real estate, tech startups, commodities, even art and collectibles. But here's the hidden part. The wealthy didn't just ride the wave. They engineered the wave. Family offices borrowed billions at near zero interest. Hedge funds poured trillions into assets. Corporations took loans to buy back their own stock. This created the illusion of endless growth. But every system built on leverage has a breaking point. 2020 to 2024 exposed the weakness. A global lockdown, supply chain collapse, massive stimulus printing, and then suddenly inflation. Not 2%, not 3%, but the highest in decades. Central banks panicked and slammed on the brakes. Interest rates skyrocketed. And this is where the rich quietly changed strategy. They realized something. The era of easy money was over. A new era, harder, more volatile, and more strategic, was beginning. And if the old system was shifting, they needed to shift too. Higher interest rates meant debt got expensive. Real estate yields collapsed. Bond markets swung violently. Bank failures appeared. Currencies weakened. Retail investors panicked. But what did the wealthy do? They didn't sell everything. They didn't flatten their portfolios. They rotated, quietly, deliberately, into assets that benefit from long-term instability, and assets that thrive under a transformed monetary system. Now let's break down the exact moves they're making for 2025 to 2030. Move number 1. Gold as the shadow reserve system. Visual, vaults, central banks stacking gold. We're not talking about gold jewelry. We're talking about allocated bullion, strategic reserves, and gold-backed financing. Why gold? Because it's the one asset with no counterparty, no default risk, no government printing, no digital vulnerabilities. When monetary uncertainty rises, gold becomes the insurance policy of the elite. And here's the twist. Central banks worldwide have been buying the most gold in 55 years. The rich follow signals, and the signal is loud. Move number 2. Crypto, but not the way retail thinks. Visual, Blockchain networks, institutional custody. Retail buys crypto hoping it 10x's overnight. The rich buy crypto for infrastructure and financial rails. This includes tokenized treasury markets, stablecoin settlement networks, institutional custody, smart contract protocols, tokenized real estate and private credit. The wealthy aren't gambling. They're building the plumbing for the next financial era, where value moves globally in seconds. Their bet? The digital layer of money will outgrow the physical layer. Move number 3, real estate, the silent rotation. Visual. Warehouses, multifamily housing, data centers. The rich are exiting. Overvalued office towers. Risky commercial retail. Luxury condos with falling demand. And shifting into logistics warehouses, data center land, multifamily rentals, farmland and water rights, energy-rich land, suburban build-to-rent communities. These sectors match real, growing demand, not speculative hope. It's not about price. It's about function. Move number 4. Private markets, away from public volatility. Visual. Private equity meetings. The ultra-wealthy now hold more private assets than public ones. Why? Because private markets offer control, predictable cash flow, early entry, less emotional volatility, access before the public ever hears the names. They're buying private cred. Every major shift in financial history followed a pattern. 1. Cheap money inflates everything. 2. Inflation breaks the cycle. 3. Rates rise. 4. Markets shake. 5. A new monetary architecture emerges. This happened in the 1970s. It happened after 2008. It's happening again now, but faster. Shocking modern data. Global debt is at the highest level in human history. 60% of countries face currency pressure. 1 in 5 major real estate markets are in distress. Tokenized assets could reach $5 trillion by 2030. Gold purchases by central banks are at a 5-decade high. Patterns don't repeat perfectly, but they rhyme loudly. Takeaway 1. The rich aren't reacting to news. They're reading long-term cycles. And they're positioning for the next monetary era, not the current one. Takeaway 2. They're not chasing hype, they're buying function. Assets that provide cash flow, security, or infrastructure for the next 20 years. Takeaway 3. They diversify across systems. Physical, digital, private, public, all connected like a web. Final warning. The shift from 2025 to 2030 won't be dramatic, explosive, or sudden. It will be quiet, slow, invisible to people who only watch headlines. The wealthy prepare years before the public feels the impact. The question isn't whether the shift is happening. It's whether you'll notice it in time. If you want a follow-up breakdown on how normal investors can mirror these strategies safely, hit like, subscribe, and drop a comment saying, break it down step by step. I'll make that the next video.